Hi, I'm Roshan Kanasan, and this is Ringgit Bytes. In the last episode, we talked about business insurance and how it can protect your business against risks like fire or equipment breakdown. But can insurance protect your business from loss of profits or revenue? On the line today, we have Zainal Abidin Mohd Noor, Committee Member of Technical Services for MITBA, the Malaysian Insurance and Takaful Brokers Association, to discuss business interruption insurance, what it covers, and how you can get it.
Business interruption insurance is about protecting the business profit in the event of unforeseen physical damage to the assets of the business. So the policy actually covers loss of potential gross profit following the happening of an insured peril. It enables the recovery of the loss or damage due to reduction in turnover or sales, and also pay for the fixed operating expenses, or we call it standing charges, until the business is back to normal. The policy cannot be taken on its own. It has to be taken together with another material damage policy such as fire insurance. Say, for example, we're talking about a grocery shop. So if in the event of a fire to that shop, the fire policy will pay for the damage to the building as well as to the contents and furniture, fixtures and fittings. But it may take about half a year to repair the shop and also to buy back all the stock and so on and so forth. So that 6-month period, he doesn't have much income. In the meantime, he still have to pay for his installments on loans that he have taken. This business interruption policy will then pay for the rental of the other premise and also on the repayment of monthly loans that he has. The standard business interruption policy does not cover any loss if the business goes through a pandemic. Since the COVID-19 pandemic, insurers have also imposed a specific exclusion for all communicable diseases under the policy. Business interruption policy covers loss of gross profit and increased cost of working, or we call it extra expenses. Now, for the loss of profit, there are two elements. One is net profit, and the other we call standing charges or continuing overheads. Examples are salaries, repayments of loans, and your rental. I'm afraid I can't give you a simple, straightforward answer, but you have to take into account of three elements. One is the average base rate of the material damage policy, it's a multiplier value, and thirdly on the sum insured, which is the gross profit. Where to get the policy? Well, almost every insurance company and Takaful operators offer such a policy, but I would strongly suggest that you approach licensed insurance brokers to give you advice, especially determining the sum insured and selecting the appropriate indemnity period.
Do you have any money or personal finance questions? Well, you can drop them down in the comments below or email us over at ringgit@bfm.my.